So hey guys, welcome to a new season, episode 2 of Bros Banter. Today we have a special guest called Sylvain Laberge from 1844 Resources coming in, breaking down the mining sector and especially what you should be looking at when you're looking at a company like his and at the stage that they're at. So tune in, listen to the whole episode and learn something in a sector that's hot, in a sector that could make you a lot of money, in a sector that pretty much is your future.
Not only did Sylvain talk about his own company, but he pretty much explained the whole concept behind mining, going from, because that's what a lot of people don't understand. You start off with exploration, then you go all the way to actual large-scale production, and then you end up like places like Murdochville and Val d'Or, that are towns that are just based all around this natural resource that in Canada we have a large abundancy of. So drop the crypto mining and get into some real mining. Dig into some mining. Ooh.
That's right. And while we're at it, take a look at our sponsor, Le Prospecteur, based out of Val d'Or.
Kick-ass beer. Nice products.
Take a look at them.
All right. And on that note, enjoy the show. Hi, everybody. This is another one of Invercio updates. And today we're lucky to have Sylvain Laberge from Resource 1844. And I've got this guy, Louis David, unusual CEO of Invercio, i.e. my boss.
Well, you guys know us. I love to invest in companies like Sylvain's, but I also love the mining sector. If you follow my earnings reports that I do every week, I've been talking about this for months now. I like mining. I like the sector. I like commodities. And I thought to myself, what would be better than just getting the information from an expert like Sylvain, or at least somebody who's in the sector who can let us know what we should be looking at, and at the same time, maybe give us some little pointers or, what not to do, because when you're getting into a new market, you're getting into a new sector, it's hard to get your bearings. There's so much stuff you can find on YouTube, but again, like I said, we have the expert in-house, so why not ask him?
I wouldn't call myself an expert. I'd rather call myself a long-term investor and a guy who's been involved in the mining sector for a very long time. And, being an expert is totally different from what I am. It's just been working a lot and been managing a company for the last 14 years and trying to acquire some knowledge of properties and where to go and what to do. And so the importance of the mining sector. I've been preaching that for the last 20 years. In that portion of 20 years, we had a nice run in the resource sector from 2002 to 2011, and it was following the dot-com crusade, which actually kind of hurt a lot of investors. And like I mentioned prior, I would say a couple of weeks or a couple of months ago in French, the resource sector always comes back. You will have some spikes in like the dot-coms in the early 2000s, and lately the marijuana sector and the cryptocurrency sector. It's not sectors that I really know or understand, but if you follow the markets in the last 125 years, there was always peaks on certain areas, and all of a sudden when those areas are going into consolidation, which a lot of companies get together, and then all of a sudden you end up, instead of having 200 companies in the dot-com sector, you end up having 5 companies that will stand and stay. But in between those spikes, the resource sector always comes back. The demand for copper, the demand for nickel, demand for lead, all the materials, they're there. It's just a matter that the prices went down. The commodity is not as attractive as it was. But when people start coming back, A lot of times they wait too long. You don't come back when the prices are at their peak. You always try to come back at the beginning of the cycle. And right now we've been in the on the dark side for mining for the last since 2012. There was a little spikes here and there. In 2016, there was a little spike. There was a little spike in 2018, but nothing that's sustained. But with the economy right now and everything we're looking at, and the electrification of that the government wants to put in place, definitely there's going to be a lot of demands in the commodities in the next I would say the next 35 years.
So that's actually something I want to touch base on quickly, is because you said, okay, 2000 in the early 2000 you had the dot-com bubble. Then after that there was back to natural resources, back, almost, it's weird to say, but back to safety, back to ground, back to trees, back to the stuff that we know that is proven value. Okay, flash forward. Today, it's funny enough, but cryptocurrency, which is theoretically a dot-com concept, is it's purely the same thing, crash, and now I think there's absolutely a return back to proven resources, like there's mining, oil, gas, energy, all those things.
There's certain pointers when resources are coming back, like right now. The pointers are pretty simple: is the demand and the reserves. If we look at all the governments that want to do a lot of electrification in the next 35 years, I would say up to 2050. If we look at what's in production right now and the decline of all the resources, we need new resources to be able to fill what's going to be in demand for the next 35 years.
Yeah, because we're building things quicker than we're actually finding the raw materials to build them.
The sector right now, if we look at it, there's the copper sector. I can talk because I'm mostly involved in copper at I would say 95%. We have a small gold property, but it's very small. It's not our core business. Our core business is really copper. If I look at the demand right now, the demand's increasing for electric vehicles, windmills, solar panels, things like that. So the demand is growing up, and the reserves are going down. The mines that were in production that at high levels, let's say 1 to 2%, are probably down to about 0.50% copper at a ton. So it's going down pretty fast. And what people what investors don't understand is that major companies, they're not the exploration type. They're the guys that are looking at juniors like us to be able to discover new properties, and then they will pop in, and it's a little bit like the biotech sector. I'd like to call myself a research and development company more than an exploration company, because what we're trying to do is find new areas where it's a lot easier to get and by access or by being able to be close to the grid or things like that. We're trying to find the right property that will bring us value, and to be able to put it in market where the majors will come and say, I'm interested in your company. The research is done either by guys like my geologist who's looking into properties. He'll look at all the what has been done on the properties in the past. He'll see where the potential might be. It doesn't mean it's going to be a potential every time. You have to look at all the data that has been entered on certain properties, and then from there, or you buy the property directly from a prospector that went on the property and digged out and got the first samples, and then it could be interesting. So we decide to join the prospector, and then we go forward. Phase one is more when we get our boots on the ground. Phase one is when, like right now, if I look at 1844, We, over the years, since 2019, we acquired claims, and we started in 2019 by acquiring certain properties from prospectors. And then from there, we started looking at all the data that was in that sector. And from that data, we realized that we needed to, we started at 32 claims. We're now up at 299. So the property, which was, I would say, about 2 kilometers long by about a kilometer wide, is right now 28 kilometers long by 8 kilometers wide. And from that step, you accumulate your claims, and you start, putting things together. You go and walk on the property, and it's always a matter of how much cash you have, how much money you have in the bank, and how fast you can have the work done. So in the last couple of years, since the market wasn't so good, so we decided to accumulate our claims. And then last year, we went on the property, we walked it, and that's still in the research and development. This year, we went a little bit further. We're entering into the phase 1. So we did the geophysic, and most of the companies in research and development for resources, that's what they do. They go on the property and they start looking at the geophysic that they had done. If there's certain anomalies that are showing up, that's where you want to start working. And then from there, you take it to, in the same phase, you take it to another level where you'll bring an excavator in. You'll start, doing some trenches, start looking if you can find the contacts. A structure, there's no structure that are the same. It's a little bit like research in biotech. There's no sickness that are the same, and there's no research in certain areas that are the same. We're in the same kind of boat or pattern where we have to find the contacts, we have to find the mineralized zone, we have to make
Contacts. What are those?
Contacts is where a mineralized zone, let's say to the east where it ends, and to the west where it ends, and then you have both your contacts, and you have the mineralized zone in the middle.
So it's like the borders.
Yeah, it's like the borders of your zone.
Of that rock. Okay.
Of that rock. And in any case, if I look at other companies that were able to identify those contacts, sometimes you end up having a structure 15 meters wide. Okay. And then when you look at your 15-meter wide contact, then you start looking how far does it go. So then you continue digging and searching, and then all of a sudden your contact is 15-meter wide by 600-meter long. Yeah. And all of a sudden the next step, which will be the phase 2, the next step is to see, is it go at depth? Is there values at depth? Is it opening up at depth? Is it?
Because it could be like an iceberg, right? Like what you could be seeing, sort of like on surface. It could be deep and wide.
That's right. Okay. Or it could be shallow and closing down. You never know. It's not an exact science. It's by digging and by researching that you kind of realize what's going on.
So for the average investor that's out there, average investor, we're not talking about people that will understand exactly rock stratification and this and that. And for the regular folks, what's the idea of what's the bonus of going with a junior versus a well-established one?
Oh, a well-established company. First of all, if you have a portfolio, and I'll give numbers as an example, but if you have a portfolio of $1 million, okay, you won't put $1 million in junior exploration. If you do, your risk is very high. So yes, if you're interested in the sector, if you're interested in resource sector, then you look at major companies. You look at the Kinross of this world, like Agnico Eagle, Centerra Gold, and then you BHP and all these guys, and then you take a decision. I'm going to put certain amount of money in those companies because, first of all, a lot of them are paying dividends. It's a little bit like buying a bank. Yes, it fluctuates with the price of gold, but the price of gold will always fluctuate. And people have to realize when you see price of gold going from 1850 to 1725, it's not a worry for companies that are mining right now in Canada, because it goes with the currency at the same time. Because when gold went to 1725, you have to look at the currency. Where did it go? Currency went down. Mm-hmm. And when you look at the price of gold, it's in US dollars. So if you look at a company based in Canada that is, their cost is in Canadian money, and they're receiving their money in Canadian money. At 1850, they were getting $2,200 Canadian. At 1750, they're still getting $2,200 Canadian, because the currency has moved at the same time as the gold price. That's good. And that's why people sometimes they get nervous. They see price of gold going down. Oh, I'm in the mining sector, I'm getting out. It's you have to be patient. If tomorrow morning you're invested in banks and the bank goes down $10, are you selling your banks? I don't think so. No. You keep your banks. If you're invested in a Newmont, or you're invested in a Gold Corp or a Cisco Royalties, you know that they're getting their money in Canadian, and they will continue to have profits. And if they're paying dividends, they will continue paying dividends. Yes, the price might pull back a little bit because of nervous people, but at a certain point, if price of gold starts going up, then your dividend will increase. So on $1 million portfolio, if you're invested in banks, blue chips, and things like that, you always have a portion. What I said, I'm not an expert, an expert in that sector. But if you believe in the resource, you invest in major companies that are producing. Then you take a portion of that $1 million. When I was talking to investment bankers or people in the past, they always told me I take about 10 to 15% of a portfolio and invested in growing companies and in speculation. What's the portion? It all depends on the sector and what's going on. So if you go in the middle, then you'll go into a company that is in development. Best example I can give is you go into a Cisco Metal. A Cisco Metal has two properties. They own Pine Point in Northwest Territories, which is a zinc mine. And their PEA is done, all their studies are done, and they're going forward with probably their project. And probably the next step will put it in production. Then they acquired in March, they optioned the Gaspe Copper mine. The Gaspe Copper mine was owned by Noranda. It was closed down in '99. It was the largest copper mine in production in North America for 45 years.
That's close where you are, right?
That's right beside where I am.
And
that's why I know it.
Look at that. That's why it ties in, eh?
That's why I know it. Is because I studied that mine, and I actually in 2013 I approached Xstrata at that time because it was owned by Xstrata, and we kind of opened the floor to negotiate and see if there was something to do with that mine. And
I think it's also important to mention that mine, and for people that just don't understand how big it was, there's a whole town that was constructed around that mine called Murdochville. That's
in the middle of the peninsula, which is like in the middle of nowhere.
And I'm not, because I've been there. And you've been there. It's not a small town.
No,
for their region, it's not a small town. It's got maybe 10.
Nowadays, I think there's about 2,000 people. But if you put it back in production, probably will increase to about 5,000. It's not a big town. It will never be a big town.
But there's 2,000 to 5,000 people that are living literally in the middle of
Yeah, and
nowhere. It's
but
and they built all the infrastructure to service that. So that's how big of a mine was.
The thing is, like with Murdoch, like they actually went and they put an option in March, and they announced in July that the option they are going forward with it. So
That's
they'll
huge.
acquire.
That's big.
They're acquiring the mine. So when if I come back to my portfolio, if I'm an investor, I've got my blue chip, my gold companies, and now I have a business in development, a business that will in 5, 6, 7 years be in production. On one side in the zinc sector, which the reserves are totally in the dump, and I'll be in copper, which the reserves are going down faster than new discoveries, and then the company will get in production. So yeah, you're getting involved in a stock at 33, 34, 35 cents, wherever it is right now, but on the long run, you'll probably, when it's in production or if it's ever taken over, we never know what's going to happen. That company might bring a lot of money to the investor. There's other companies like that. There's other companies doing PEA right now. I'm talking about that one because I know it pretty well. But you always have to look forward in those the development sector, because they might get in production. Another one that is in development right now that I just popped up in my head is Nouveau Monde Graphite.
Yeah.
Nouveau Monde Graphite, they've been working on it since 2012. They did their PEA, they did the whole thing. Yeah, but it takes a while. It takes about 10 years to put a mine in production. It's not something that happens like overnight. First of all, you have to do all the same type of research I was talking about, where you have to go on the ground, you have to do the first sampling, then you have to send it to the lab, then you have to be sure that it's the right type, like in the graphite sector, it's the right type and the right flake of graphite that you need to be able to build batteries. Then from there, you start opening up. How big is the deposit? How large is it? Then you have to go through the PEA, you have to go through the environmental studies, the water studies, the whole thing. And then at a certain point, you have to always look at the acceptability from the society around you. So now they were working since 2014, I think, talking to the natives in that sector, talking to the people living in that sector, and they're about to put it in production. So you always get involved in certain companies that are in development. And then once that is done, then you take a decision, you say, okay, fine, I'm going in speculation. Then you start looking at junior exploration company like we are.
Like you, yeah.
What are the basics to look at those companies? First of all, the location.
Yeah.
Are you close to an area where there was a mine in the past? Are you close to an area that has the infrastructure going over it? Is there roads close to it? Is there electricity close to it? If I'm in Val-d'Or, there's no problem. There's no issue in that sector because you're close to everything. If you're in Chibougamau, it's the same thing. If you're in James Bay region, it's a little bit different. First of all, if you start a drilling program in the James Bay sector, you have to fly your drill by chopper. You have to fly your crew by chopper.
That's right.
Your budgets are not the same. Where I will spend maybe $2 million to bring it to a certain level and prove a discovery, they'll probably spend about 6. Because
the financing's different.
The cost is totally different. So these are the factors that you have to look at. And the other thing too is the management. What's the background of the management? Have they been jumping from one thing to the other? Have they been going into the flavor of the month? Oh, it's lithium this month. Okay, let's find a lithium project. Oh, it's copper this month. Let's find a copper project. And oh, no, it's gold. Let's find. So if you see a company jumping from one commodity to another commodity,
it's a red flag.
They're just chasing something to be able to pop their stock. That's the way I look at it. if you're looking at a company, and I'm not talking about myself, we've been in copper for the last 14 years now. But our main or our flagship has always has been copper. So you have to look at how people are working within the company.
Stability, right?
Stability is the thing to look at. Then you look at the management, you look at the property, and you look at the sector. First of all, the management has to be steady. You don't change your geologist every 2 months. The management is the same thing. Your CFO has been there since the beginning. You haven't changed CFO for 6 or 7 times, and you've been always focusing on the same thing, on the same area and the same project. We are as management of companies. We have to be believers in what we do, and if you see that the company you're looking at, people are not believing in what they're doing, I wouldn't invest in it. And I'm an investor too, so.
That's a good thing. That's a good point. And you also mentioned one thing, though. And I want to get back to that because you mentioned it really low key, but that's one of my principles when I invest. When things are dipping or people are scared, that's typically when I get interested in something. And when I see that a metal is dipping, my first thought is I question myself, why is it dipping? Where's the production going? And if I should be buying that dip. And I think you mentioned that really low key, but that's an important factor as well. And that's why that when people are usually scared, it's typically the best time to start buying something.
Yeah. You have to look at the reasons why the stock has been sold too. If you notice that a company is dipping and you did all your math and you did all your research, and you see that a company is dipping on nothing. They have no bad news. They have nothing going on. They're doing exactly what they're supposed to do. They're not lying to the market, and you have to look at them and say it's dipping. Probably it's a good chance for me to either come in or average down.
Yeah.
And I think that's one of the things that you hit 2 key factors that people don't realize is when they look at their stock says, oh, this company is going down. Well, if there's no material change, there's no news, there's no nothing, then you got to take a step back and go, okay, so is this just this company or is it a sector thing? Oh, no, at this point, it's not even a sector thing, it's a everything.
It's everything.
Where, the S&P got hammered, the Dow Jones got hammered. So it's like, so it has nothing to do with your company.
Nothing.
So that's when like David says, that's when you double down. You go, and as a good CEO of a company, and that's not every CEO, they'd be like, buy more. You're going to average down your cost, that's actually a smart thing to say to your investors. Like, this is the time, and as a guy, you need their support.
If you know your investors, when they call you up, you can say that. I wouldn't go on live anywhere and start saying, "Hey guys, average down now. It's the time." It's a matter of feeling for every shareholder that we have in the company. The other thing too is one point I didn't touch is you have to look at the management, the properties, and at the share structure. Who owns what? Okay. If you look at a junior exploration or a junior research and development, and the management is not involved in the company, and I've seen that in the past. People really, the president CEO is in place. There's 60 million shares outstanding, and the president owns 150,000 shares.
That doesn't look good.
No, you have to look at who's the shareholders of the company. If I look at my company, or our company, because it's not mine, it's mine and all the shareholders. I've got one shareholder based in Austria. They own 17.4%. They're very keen on copper. They're very keen on exploration, and they're involved in multiple companies in our sector. But they choose us in the copper sector for the eastern part of Canada. I've got a second shareholder from Saskatoon, which is originally it was my It was the company that was behind us when we went public in 2012. It's 49 North. It's a resource fund based in Saskatoon. It's family money from the mining sector. They put in production a gold mine in Saskatchewan. They were involved in potash when it started, so they know the resource sector. Then I look at the management. We're in the management by itself. We own 22%. So
that's a good sign.
Yeah, so 22%. I'm in there. My CFO's in there. My GO's in there. We're all in there. We all believe in what we do. And then you have your friends and family. Wow, that's always,
Yes.
it moves. Sometimes you have friends and family. You have a friend that has, 250,000 shares. He's calling margin. He has to sell 50,000. It happens. It happens.
Yes.
So in reality, you look at that first when you're looking to invest in a company, and you're looking at what kind of press release they're coming out. Are they really like promoters trying to put into your face that they have the best property in the world and
buzzwords,
and we got a new discovery in such and such sector, and we're better than everybody else.
Battery metals.
That's right.
That's right.
So
Keep buzzwords.
Buzzwords. So you have to be careful on that, and that's the points of the investment. And as far as, let's say you started with $1 million with the portfolio, my fictive portfolio, started with $1 million. You got security for about $800,000. You've got about $100,000 into development companies, and then you got about $100,000 in speculation. The blue chips and banks and higher end companies will bring you a return of about 4, 5, 6% per year. Then your the development companies will bring you over, I would say 4 or 5 years if you're patient, will bring you a percentage of about 15, 20, maybe even 50 to 100%. You never know. Because I remember, and I won't say the company, but back in 2000, I invested in a company when the mining sector was totally in the dumps. I invested in a company that had 42 cents of cash per share at 35 cents. Nobody was looking at it because it was a gold producer.
Yeah.
The company, when I sold, had become a major company with interests across the world, and it was trading at $10. But, the sector had changed from 2002 when I invested in. I sold probably, I think it was in 2005, 2006. So it took 4 years to get to that level. And it's all situations, there's ups and downs in the sector. If we go into the research and development, in the exploration, if I make a new discovery tomorrow morning, my stock goes from 5 to 25 cents.
Yeah.
Then I prove the discovery, it might run to about 40 cents. So everybody that got invested at 5 cents,
that's huge returns.
that's huge returns.
And that's why, one thing though, I'm all about leveraging my money for maximum return. So obviously I don't have $1 million portfolio, but understanding the metrics of what a 5% return is and what a 20% return is, or a 200% return, that's why I like companies at your stage.
Yep.
Because I get more bang for my buck. And especially if I find all the key elements that you were mentioning, I'm feeling a lot more secure about getting my bang for buck. Now, obviously, I'm not a portfolio advisor. I'm not an expert in money management. But I can tell you that when I'm looking for my bang for buck, typically these are things I look for.
And I think, it's worth mentioning that just about everybody that just got hit in the cryptocurrency, most of them weren't crypto experts at all. They were just buying NFTs and this and that, and they're just complete, they don't know anything, and they go, yeah, cryptocurrency, great. Well, might as well get something,
Yeah.
invest in something that you understand, which is tangible. Exactly. If you can invest into copper, well, you know what? You can, if you're really lonely, you can go to Renault Depot or Arona, go buy yourself a piece of copper, going like, I'm actually invested in this.
Yeah.
true.
The other thing too that we're talking about the exploration sector, but we have to look at all the sectors. If I go back in 2002 when or 2000 between 1999 to 2002 when everybody was going crazy on dot-coms, how many dot-coms survived? About 5.
Yeah, that's pretty
Between
much it.
5 and 10. Amazon, Google, those are the guys that survive. But they survive by acquiring technologies. They survive by acquiring certain companies that had the potential to go but didn't go. If I look at the marijuana sector,
Same
it's
thing.
the same thing. But if I ask you, how many people lost money in the dot-com? It's tremendous. Because a lot of times people were chasing or listening to, oh yeah, my brother-in-law told me to get 100,000 share in so-and-so, and my neighbor told me to, and it comes back to the same thing. Do your research. Don't try to run after the stock that so-and-so gave you. I'm on a platform, and I think you know it, I'm on the platform, and I don't chat on it. I'm just following it to look at what people are saying. On that platform, one morning I saw a guy come and chat, and the guy was saying, yeah, I've got about $5,000 today. Can somebody give me 4 or 5 company where I can make money during my day?
Right now, today.
So that's what we call day trading with no knowledge. Because anybody is going to give him certain pointers, and he's going to jump into it. Doesn't mean he's going to make money, and you have to, yeah, you can be lucky. It's like the casino. You can be lucky at the casino. You can go and spend $100 and win 10 grand. Yes, you can on the market. You can spend $100 and maybe get 3 grand. It could work,
Yeah.
but it doesn't work every time, and it doesn't work over one day. So you have to be conscious where your money goes. And yes, if you're lucky, don't think you're going to be lucky every time. If you go from, I don't know, $5,000 to $500,000, don't think you're the guru.
No, yeah, I hope you're cashing out at that point.
Yeah, and I hope if you're 19 years old, I hope you're going to spend money going to school.
What was it? Doge?
Yeah, Dogecoin.
Dogecoin is a great example. It went from 5 cents all the way
It
to
went to like from 2 cents all the way up to like 80 cents Canadian.
80 cents Canadian.
Now it's worth like, again, I think it's maybe worth 10 cents now.
But the guy that
It's-
pulled out at 80 cents,
He's laughing.
he's laughing.
The
But
guy that's holding though.
oh, the guy that's holding is an idiot. But if you pulled out, you got to know your place. But those are called exceptional moments
Yep.
that you lucked into. There is no knowledge happening.
Look at the gaming company last year, where everybody started squeezing the shorts on it.
Yeah,
Oh, yeah.
GameStop.
The company was on the verge of bankruptcy. And everybody squeezed the shorts on it. The stock, there was a story of a student or a young guy, 18 years old, that put I think it was 5 grand, and it went up to about $1 million. Yeah, great. He was lucky, and I'm glad for him. But we don't know the rest of the story. What did he do with his $1 million? What happened after that?
He
Did
put it all
think-
in Dogecoin.
That's right.
Well, that's
And-
that's the thing. Sometimes you gotta, but that's called the luck play. That has nothing to do with intelligence, and that's when people have to realize, I got lucky. I bought a lotto ticket, and I won, and that's it. Don't mistake that for intelligence. Whereas what we're talking about
Is investing.
It's investing. It's okay taking the time to do your due diligence.
Yep.
Read up,
Okay.
understand the commodity, understand what it does. Just start with what it does. Copper, like we say, is everywhere.
Everywhere. But people have to understand that yeah, I keep telling when shareholder call me and they tell me, oh, I bought another 250,000 shares, and I always tell them, listen, you bought it at this level, your average price is about that. I hope that if one day my stock goes, that you'll sell a bit of it. You always have to leave some money on the table. Trying to always get the peak of a stock, it's not worth it. Like I started investing a long time ago with my dad, and he always told me, leave some for the next guy. You always have to leave some for the next guy. Even if you know that there's a discovery, it's going to go crazy. If you're invested in a stock at 10 cents and it goes to 20, I keep telling people, at least take back your money. If you put $5,000 in the company and it goes to 20, so you're making your money, get your 5,000 up. And then let the rest run for a while. And if, I don't know, if it goes to 50, then you say, oh, I'm going to sell 5,000 shares. And if it goes to $1, oh, I'll sell another 5. You're paying on your profits as you go along. That's how investment should go. And you always leave money to the other guy. The guy who bought you at 20 cents, if he makes it to 40,
Good for him.
that's more money coming back into the system. And that's what the investment should be, is where people are making money and it's bringing it back to more investment in certain companies.
Except if you're Kevin O'Leary, because you always buy at the lowest price and he only sells at the top
Mr. Wonderful.
because he knows. He knows. he just knows.
Okay, guys, to the nitty gritty. Your company, 1844. Okay, you touched on it. Right location, near a road. How's the power situation looking?
It's kind of strange that you talk about power, because our new sector is called power, because we're right under the
Okay.
electric grid. So our project right now, and we always been looking for the same thing. It's pretty easy in the Gaspe region. You have an airport in Gaspe, an airport in Montjoly, an airport in Bonaventure. So the access by airplane is pretty easy. You have roads all over the place. You would see that map. Forestry roads are all over the place in the Gaspe Peninsula. We have 2 deep sea port, one on the south side, one on the north side. And, 3, because we have one at the end, which is the Gaspe port. So we have 3 deep sea port. So all the infrastructure is all around us. The power line is going directly on native copper. The power line on Vortex is going directly from the 299 to Murdochville.
So infrastructure is there.
It's all there.
Okay. Now,
So you're close to everything. There was a mining mentality for 45 years. So we still have people that are looking forward to Gaspe Copper Mine to reopen, because they know it's going to bring new jobs. If you look at the Gaspe Copper Mine, if it goes back in production, we're looking at anywhere between 300 and 500 people to work at the mine. And if we look at usually when the direct involvement from employees is about 300, that means that the indirect employment is about 1,000 people.
yeah, restaurants,
Restaurants,
everything. Gas
mill
station.
work, mechanics, name it. There's all kind. Even during the construction of the new facilities, it's gonna probably go to about 1,000 people to work on the premises.
So you mentioned 2,000 people currently right now. The population.
Yeah, but most of the people that are staying there they're more of it's not like it used to be. It's not very active people. It's more people that have bought houses as summer camps or winter
but still,
camps.
if you
But
have-
there's still people.
It means that you could bring in another 1,000 to 2,000 people to
Not
work.
me, they.
Well, they, not you, but that
They.
place has that potential.
That place has the potential, but the repercussion from that is that
Other people will work.
other
on-
companies like us are more interested to come in the Gaspe region. For 14 years, people were saying to me, why are you persisting on working in the Gaspe region? Because I believe I can do a discovery. I believe I can find something new. we really believed it. And for 14 years, we've been fighting against the wave because everybody was saying, why don't you go to, we acquired a project in Chibougamau. We went there and we didn't find anything. We got a gold project in the Gaspe region. It's probably the last fault in Quebec that hasn't been explored at depth. So we have a gold project on the south side of the peninsula. We have worked on it in 2020 and 2021. We wanted to understand how the gold was put in place. We have an historical resource on that for 40,000 ounces of gold. But we're very cautious. We're going very slowly on it because it's very, not complicated, but you have to understand how the system was put in place, how the veins were put in place. Because we know now that the resource that we have, or the historical resource that we have, is based on four veins. But when we did the geophysics, we understood that those four veins are associated to corridors. And on the property, we have 26 corridors. And directly, 4 of those corridors are associated to the vein system. So now, the next step, we wanted to understand how it worked between. So the next step is to go east from those veins and go west and see if we can, create the same signature. If we create the same signature, that means we have probably some gold. The property was never drilled under 80 meters. So in 2021, we decided on one vein because we didn't want to replicate everybody's work. Instead of twinning holes and things like that, we wanted to understand how the structure was put in place. So we didn't have the best results in the world, but at least we drilled at 120 meters, and we know we struck again at 100. So we know it's going a little bit deeper. But now we understand that between the veins, there's a structure. Mm-hmm. And the structure is very conductive on geophysics. So it's giving us a lot of data. So now it's to see if we can find the same thing between those corridors. If we find the same signature, that means that we probably have another vein. So, but we have to dig. That's research and development. You have to continue digging. And one day, yes, you announce that you have a new discovery. But it's hard to announce a new discovery if the money is not there. And that's what people have to understand too. As much as you would like your company, and I'm not talking about me, I'm talking about any company in the sector, as much as you would like to have a 10, 15, 20, 25 times your money, if there's no support at a certain point for the company to be able to finance at proper prices, the research stops.
Yeah, because
then
you're raising less money for that research.
and the company goes either belly up or whatever. But you have, when you're investing in a company like that, you have to understand that, yes, sometimes it will be slower than usual. Sometimes, and yes, you saw the company 5 miles from me make a new discovery. Instead of trying to chase the guy 5 kilometers from me, just think, if he made a discovery there, he's been working there for 3 years. Maybe the discovery is all connected together.
Yeah, that's it.
I have no competition having people around me, because if my neighbor makes a discovery, it means we're in the good sector. We're in the right place. Will I make one? I can't promise, but at least we know we're in the good.
It's all about putting the chances on your side.
And there's something really interesting that's happening, that's happened due to the way now we're communicating with LinkedIn. Now guys like you can actually do some exploration, either get some drone footage, get some videos, get some photos, and put it on the website, and you can actually get some nice photos. And the great thing is that small companies, if you don't understand what the photo means, and I implore anybody that goes on any website goes, oh, wow, these are great photos. Look at the photo, type an email to the CEO of the company saying, this is a really cool photo. What does it mean? And he'll
does
be
it mean?
happy to explain it.
Yeah, it's like I said, in the first stage of a phase one, you always send people on the ground, and you do your trenches, and then you know that you have the right type of rocks. You look at it and you say, okay, fine, that's interesting. There's such and such minerals in it, and there's a possibility that it's always a possibility. It is a proven discovery when the lab send you the report, and then the rocks that you acquired or the rocks that you picked up and sent to the lab are showing 3% copper, 4% copper in the copper sector, 15 grams per ton. But we're talking about grab sample. And that's what people have to realize, is that a grab sample is not significant of what's in the ground. A grab sample is a rock that you know is in place, you pick up, you put in a bag, you send it to the lab. That's the first indication that you want. Then you do what we call channeling. You come in with a saw, a metal saw, and then you start channeling on the rock. Let's say you have like we talked before, the infrastructure or your contacts gives you a zone of about 15 meters. So what you do is you go and channel across and get that 15 meters in 2 bags and then send it to the lab. And yes, the results might not be the same as your grab sample. Your grab sample might be, give you straight numbers. Let's say I give you 5% copper on a grab sample. But when you channel, you have to realize that you're channeling on 3 inches wide by 15 meters long. So all the material you're picking up and putting in bags, and you keep 1/2 as a witness, and 1/2 goes to the lab. And then it comes back with results. All of a sudden you have 1.5%. But 1.5% is significant on a 15-meter channeling, because it means that it's continuous, and it's 1.5%. The grab sample is like picking this, and channeling is like taking this the whole way from the table. So this, when you put it into a lab, can kick a lot, because if there's a lot of minerals associated to copper, it will give you big numbers. But if you look at the channel, maybe you'll have that type of rock here, but here there's nothing. Then you have something, then you have nothing. So that's why sometimes when you see channeling, your grades go down. But if you see channeling, it's pretty relevant to what the structure is.
Yeah.
Because that's what you picked up on 15 meters.
And then after that, you do some coring to.
Then you do some
line.
you do a drilling program, because now you know that you have 15 meters wide, and I don't know, you see it on surface for 600 meters. You know that your structure is like 600 meters long, 15 meters wide, and now the thing is, does it go down? That's what you have to understand. That's the next step. Do you have something more than what you see on surface? So now you bring in the drills, you bring in the program, and then you start drilling. And when you start drilling, you're drilling in an angle. So yes, the results might be 25 meters at such and such, but you have to remember it's at an angle. So when it goes in, when it comes out, it might give you 25 meters. And then when you look at the drill results, all of a sudden on your drill results, you have 1.2%. So it's pretty much similar to what you have on your channeling on surface.
Yeah, so finally your discovery, or at least what you're looking at, it, like you said, it starts taking shape. And as it starts taking shape, then you start to have a good idea of what the next steps are. And what are the next steps for you guys?
The next steps after that, if your drilling program is good, if you did your everything, then you have that effect, that you have a major. Let's say I can give you a lot of names: BHP, Rio Tinto, Glencore. All of a sudden, they have an interest in your company, and they say, "Hey, I'm interested in this thing. They got 25 meters wide, and then we know it's 600 meters long. They drilled, they got results. So at that point, the major might come in and say, "I'll finance you for $1 million."
Oh.
And then we'll go forward with that. And then you start spending your money on the drilling program to accentuate or get your resource well known. Then after that $1 million, that you were able to delineate about 100 meters with thickness, with the whole thing. And then they might say, okay, fine, when's your next financing? I'm putting more money. I'll take 10% of the company. I'll take 15% of the company. I want to get in. So that's how they start getting in.
I love this sector.
So if we do a quick recap before we close, what's the situation with the 1844 in the near future, and
Where you at right now?
We're in that phase where we just finished 18 days on the ground, where my guys are, we posted certain rocks on LinkedIn. We like what we're seeing right now. We like what the sector is showing us. The sector by itself, we called it the power zone. So it's showing us certain things that are interesting. And like I said before, I don't know. In the future, it's going to be what comes out of the lab. If the lab gives us good numbers on the grab sample we picked up, then we'll look at it and decide to continue. We already have 3 trenches done. Then we'll take a decision when the sampling or the assays come back. Right now, they're going back on the 15th. There's certain things that we still have to do on the property, on that power zone. There's other areas, because there's a lot of showings on that property. There's about 9 showings on the property. So we have Ruisseau Quentin, Ruisseau Bleu, we have the Dimanche zone, we have the Triangle d'Argent, Fer à Cheval. So there's a lot of zones that we have to look at. We started, my geologist that I've been working with since 2006, because we were in something else
The
before.
stability right there.
Yeah. He thinks out of the box. Instead of going on properties and repeating what people were doing in the past, we're thinking out of the box. Look at the stratigraphy sorry for my English, of the property. Where do we start? Are we starting in the volcanics? Are we starting in the sedimentary? So we're looking at all the strats and taking decisions from there. Yes, we could have been going on Triangle d'Argent. There's a zone back in the early 2000s. They channeled 1 meter at 31% copper. But did we have to go back there? No, we're more interested in looking at what hasn't been done.
Yeah.
And what sector, by the geophysic and by the LIDAR, what sector is has more potential.
Yeah, like you said, you're building that structure.
Yeah. And then, we might go to Fer à Cheval and Triangle d'Argent, but they're all known. So we have to look at other situations, and then from there, we'll start looking at other showings. So in the near future, what's going to happen is probably we're going back on the 15th. We'll continue work on the power zone. We'll probably start working on Ruisseau Quentin, because we have a small interest in there. We found last year when we walked, me and my geologist, we found the old casings from the drilling program in 2008. So we know where the drill holes are. So we'll probably expose the rock. We'll try to see if there's a similarity to the power zone. So there's a lot of work to be done. You have to understand 28 kilometers by 8 kilometers wide. The playground is pretty big.
So in other words, we got to keep watching the news that's coming out,
Definitely.
either on your website
We're on the Invercio platform.
on the platform.
And who knows? Soon enough, we might get you in for a real 1844 update.
But on one thing though, I have to mention is he said he wasn't an expert. He does sound close to it though. Eh? We were talking about medical or at least research laboratory similarities. Let's be honest. You just gave us a good breakdown. A good
No,
picture.
I'm not. An expert would have been a geologist that knows all the rocks and all, and knowledge of the market and knowledge of the stocks.
You're a good generalist.
It's just my experience. I don't have any degree to call myself an expert, but by experience, I know where I'm going. By experience, I know what people should be doing. And if you want to spend $5,000 trying to chase your dream, and I don't know, make money in 2 days, I suggest there's a casino right in the middle of the St. Lawrence River. It's probably better there because $5,000 to make money or double your money in 2 days, 3 days, your gamble is probably better with the casino because you'll never make money a double or a triple on a 2 day basis. You have to be invested. You have to take. It's going to take long. I have shareholders that have been there for 12 years.
Yeah.
They still listen to me. It's kind of crazy.
On that, thank you guys. We'll keep you updated with more news on 1844. On that, we'll see you next time.
Thank you.